Welcome to the Opening Bell Report.
This really blistering financial analysis report on RedCat Holdings, ticker is RCAT, and we've boiled it all down for you.
We have, and we're diving straight into their preliminary Q4 2025 results, which, analysts are not just calling growth, they're calling it an explosion.
Yeah, an explosion isn't an exaggeration. We've seen growth stories before, but this is different.
It is. The core finding in this analysis, it's genuinely rare. We're talking about a projected, get this, 1,842% increase in quarterly revenue.
A 1,800% increase.
That kind of figure, it just changes everything about how you have to evaluate a company like this, a small cap defense player.
That's the shock number that just jumps off the page. And when you see a company projecting that kind of growth, nearly 2,000% in one quarter, it really boils down to one question.
Is this for real?
Exactly. Is this the data point that finally validates the story and, potentially turns this small company into the defense sector's next super stock?
Well, our mission today is to cut right through that noise. We need to synthesize the substance behind that number, what's actually driving it. There's a fundamental geopolitical force at play here.
Right. And what's the counter argument to the usual risks? The risks that always come with this kind of hypergrowth.
And that's why analysts are, the report says they're aggressively screaming strong buy. So we're really looking at why this reported growth matters right now in this whole defense tech landscape.
Okay, let's unpack this. The financial reality. We're working with what the report calls a bombshell preliminary report. It came out on January 13th for Q4 2025.
And it's not just growth. It's about a sudden, almost violent acceleration.
Yeah, and the comparison between the quarters really shows you the scale.
So let's ground this in the hard numbers, because to really get that 1,842% figure, you have to look at the starting line.
Where they were a year ago.
Exactly, a year ago. For Q4 of 2024, the company's revenue was, it was tiny, just $1.3 million.
1.3 million, that was their reality.
Right. And now you fast forward 12 months. Based on these preliminary results, Q4 2025 revenue is projected to land somewhere between $24.0 million and $26.5 million.
Wow.
That leap from 1.3 million to over 24 million. That's where you get the number that has the market so captivated.
And you have to think about what that means operationally. It's not just a bigger number on a spreadsheet.
Not at all. Going from 1.3 million to 24 million in revenue means the company has gone through a radical shift, a total transformation.
They've had to retool factories, hire people.
Oh, yeah. Staff up, manage incredibly complex and secure supply chains, and actually deliver on mission-critical contracts, all in a single year.
It's a huge signal. It tells you they've moved past just proving the concept.
They're executing. High volume production. And if you pull back to the full year picture, the analysis projects total revenue up to $41 million.
Which is a 153% jump year over year.
So again, it's not just that they beat expectations, they shattered them. It proves the business has hit a critical inflection point where all that demand has finally turned into hard sales.
It's the difference between being a research company and a real defense manufacturer.
They're moving product at scale. But that brings up the big question, right? How sustainable is this?
Exactly. This kind of growth isn't magic. It's always rooted in some powerful external force. So what did the analysis identify as the root cause for this explosion in demand?
The analysis points to one incredibly powerful shift in the market. It's effectively creating a massive greenfield opportunity for domestic drone makers.
And that is.
The U.S. Department of Defense, the DoD, is aggressively, and I mean rapidly, moving away from Chinese-made drones.
Yeah.
This isn't just a preference, it's a national security directive. And it has left a sudden, huge vacuum in the supply chain.
So the DoD doesn't just need a drone, they need a trusted, secure, American-made drone. And that brings us to the real moat here.
The Blue UAS certification. That certification, that's the $25 million engine we're talking about. Blue UAS is the mandatory stamp. It's required for any drone system the DoD buys.
And it means it's been through rigorous cybersecurity audits, uses a domestic supply chain, all of that.
All of it. And it's not just a simple checklist. This is a very, very high barrier to entry. It basically excludes 99% of the global market.
So it's incredibly hard to get.
It is, which means the pool of suppliers the DoD can actually buy from is extremely thin. That scarcity creates a really defensible market position for the very few companies that have it.
And this is where the report brings in RedCat Holdings subsidiary, Teal Drones.
Exactly. Their flagship platform, the Black Widow, is perfectly positioned to capitalize on this.
The timing was perfect.
The timing was everything. They developed the tech and, crucially, secured the certification before this mandated shift created this this unprecedented spike in demand.
So the analysis makes it clear the company is shifting. They're moving from just testing and developing drones
To mass manufacturing them, to meet what the report literally calls mission-critical demand. This isn't about R&D potential anymore.
This is validated execution.
Yes. And that transition is exactly what the market seemed to price in, like instantly.
Okay, let's talk about that. The market reaction on the day the news broke, because it tells a story all on its own about institutional confidence.
Oh, it's a textbook chart. A perfect example of smart money accumulation. The stock opened strong, I think around $12.71.
That word got out.
Right. But then you saw what always happens with big news, some retail hesitation, people taking profits.
Which the analysis called the bear trap. The stock got pushed down for a bit. The intraday low was, what, $11.92?
Yeah, and anyone just looking at that dip might have thought, okay, the news is priced in, the rally is over.
But the institutions saw it differently.
The institutions, the smart money that understood what 1,842% really meant, they saw that dip as a gift, an opportunity.
And they stepped in.
They stepped in immediately. The analysis shows they were accumulating all day long, just buying up shares, breaking through resistance, and pushing the stock to close near its highs for the day at $13.66.
And that's such a crucial signal. When a stock reports growth like that and then closes on its highs after shaking up the weak hands.
It tells you the big money, the institutions, they are not done buying. They saw that dip as a buying opportunity because they believe this growth is sustainable.
Okay, but if they believe that, they must have an answer for the biggest risk, right? The cash burn. Small companies growing this fast just incinerate capital.
Constantly diluting shareholders to fund the expansion. It's the classic small cap trap.
Right. But this is where the report makes its most critical counterargument. It basically says that risk is off the table here because the company is sitting on a, what do they call it, a war chest.
Yes, and this is the anchor of the whole bull case. It's so important. RCAT is reported to be sitting on a massive cash position.
How massive?
The number stated is over $180 million net of debt.
180 million.
To put that in perspective, that is huge relative to their market cap, and it's astronomical compared to the $1.3 million quarter they had just a year ago.
So while they're spending all this money to scale up production to meet this new $25 million demand,
Which is incredibly expensive to do.
they don't have to panic. They don't have to run to the markets every 6 months with their hat in their hand asking for more cash.
Exactly. This financial runway, it fundamentally alters their strategy.
Yeah.
It lets them scale that manufacturing effort, hire engineers, buy parts, fulfill these huge DoD contracts without diluting the people who already own the stock.
So management gets to just focus on one thing, execution.
Delivering the product, which is exactly what they need to be doing.
So that is a powerful combination. Mandated demand meets a company with the cash to actually deliver. All right, let's shift gears. Let's look forward. If this is the new baseline, where do analysts see this going?
Well, the analyst consensus has reacted with extreme confidence. The report notes that price targets have been slapped on this stock in the range of $16 to $18.
So significant upside from here.
Significant near-term upside. They're basically operating under the assumption that this Q4 performance is the new normal, not some one-off event.
Okay, but let's play devil's advocate. How do we know it's not a one-off? Are they just extrapolating one huge defense order that won't get repeated?
That's the right question to ask. And the report addresses it by tying it all back to that geopolitical driver.
The move away from Chinese drones.
Exactly. Because that DoD mandate is a fundamental nationwide security priority, the demand is inherently recurring. It's structural. They aren't just replacing a few drones. They're replacing an entire technological capability across all branches of the military.
So the analysis argues this $25 million quarter is just the beginning of the production ramp-up, not the peak.
That's the argument. We're watching a pivotal moment. The company's moving from its development phase, where the story was all about potential,
to a hyper-growth production phase where the story is all about delivery.
and they hit this transition at the perfect moment. The global defense budget for this specific kind of drone tech non-Chinese certified drones is just skyrocketing.
Okay, so let's summarize the core conclusion from this very bullish analysis report.
The bottom line is that RCAT isn't just a hype trade anymore.
Right.
For a long time, the stock traded on the promise of the Blue UAS certification, the promise of future contracts. But now, with reported quarters, over $24 million.
The fundamentals have caught up to the story.
They've caught up. The potential is now being realized in cold, hard revenue figures. And that moves this company into a totally different class of defense contractor.
It's proof of concept, made real, with a huge financial runway and a massive geopolitical tailwind. I mean, the core takeaway is still that incredible 1,842% reported revenue surge, all driven by that mission-critical demand for Blue UAS drones.
And for you, the listener, the thing to watch is this transition. Can they consistently deliver the Black Widow platform? Can they secure follow-on orders? That's the real test of whether they can maintain this trajectory.
Which brings us to our final provocative thought for you to explore. The analysis also offered a very specific technical signal to watch for, a sign that the market is fully buying into this new higher valuation.
Yes, they suggest watching for a technical break above the $14 level.
$14.
That's viewed as the key short-term resistance. If the stock can clear that level and hold it, the analysis says blue skies are ahead. It suggests those analyst targets of $16 to $18 become much more attainable.
And that break above $14, it isn't just a price point. It would be the market's confirmation that this company has finally made the jump from lab promise to reliable factory output.
Don't forget to like, share, and subscribe for more.